Good afternoon, all. CamelbackTrading.org coming to you this Thursday afternoon, February 25th. We are looking at the SPY ETF's market profile here on Window Trader. And I'll tell you what a day, what a week. How everything has been given back by the bulls again. Very disappointing. Volume, tremendous. 142 million with the after hours still to come. So we're going to do between 150 and 160 million. We have not done that type of volume in a long time. January 29th was the last time we did 100 million. We did 129 million. So acceleration to the downside, a beautiful afternoon rally high, an excellent highest accepted price. I have a webinar tonight in the next 25 minutes, so I'm going to try to keep this video short, although I would love to be talking about a ton of things that transpired today. Let's look at, first and foremost, the Russell. They go out with an outside day down. Remember this morning I said there was no headwind for the Russell to their all-time high. They had a couple of daily highs to take out. Well, they looked above yesterday's high, and we close above yesterday's low and go out with two sets of single prints in C and B for a trend day down. Not very encouraging as they're in balance now in the daily. Triple Qs. Remember, we said they had a lot of work above them before today. Well, add today to the list, as they couldn't even take out yesterday's high, filled yesterday's trend day, just like Russell did. They gave back their trend day from yesterday. Qs take back theirs and go out with a trend day with single prints in E and B. And then for us, SPY and the ES. We open, so remember yesterday we had a probe. We had an afternoon pullback. We had three sets of single prints. I said this is where change took place. B's high was the low of the two weekly lows that we got below on Tuesday and took back. Well, guess what, folks? Look where we stopped in C period. We stopped right at B's high, attempted to rally in D, attempted in E. Once we broke below the two weekly lows, see you later. We had a highest accepted price, and everything just fell out for the buyers. Now, I had a good day. There's a lot of trades I did. I'm not going to go over all of them because I want to try to keep this short. I took nothing but shorts today except two. I took a long against B's high. Remember? Right here where it stopped. I kind of made small on it, but nothing big. And then the other long I took, and this one I did not recommend to anybody, but I took it, is when H really flushed hard. I took a long and literally picked the bottom because it rallied pretty hard. But the most important thing I could tell my traders today, and on a day like today, is do not look for longs. The only time frame I told them they should possibly look for a long is when J took out H and I's high. I did a lot of absorbing of shorts, and then when J finally took out I's high, some of that short pressure from all day got alleviated and the FOMO buyers came in. That's the only time frame you should have been looking for a long. That's it. If I keep my room out of trouble, I don't care if they don't make a trade all day. That's the purpose of it. I had a fantastic day in shorts. We had the highest accepted price. I mean, I missed B period because I was talking to the room, and I missed that short at the highest accepted price. But I can tell you what, I didn't miss many shorts after that. After that long in C, I was short in C, short in D. You name it, I was short. E, F, G. So I was short in every time frame, did well on every one. Every push up, I shorted. I tried to explain that to the room. You shouldn't be looking for longs, but because we have a trend day, because we're getting acceleration to the downside, every push up, you should be looking for a short. Don't look to fade and go long. And I think for the most part, the majority of the room stayed out of trouble and actually did well today. So, again, that's the biggest thing on a day like today, is to keep the traders, to keep your money. It's the money you keep, not the money you make. Plain and simple. I can guarantee you a lot of people got hurt today because Everybody's looking to buy the dip in this market. Now, when you gap lower by $5-6 and then you start to grind up, yeah, that's still buying the dip. But on a day like today, when we opened and went up to 391 and then traded down to 380, below 381, we literally went down straight $10. I can't imagine how many traders tried to catch each time frame's low. It can't go low. It can't go low. It can't. Oh, yes, it can. So it's easy to make money when the market does nothing but go up and buy the dip. That's not trading. Hopefully this is going to give us some great opportunities now with this volatility and volume. So, destinations for tomorrow. Upside. There's a ton of them. We went out with a price probe. Now, we ended up 7 wide, which is positive, but we did take out H's low, so 381.76 is the price probe. Then we have the afternoon rally high, 386.67, which, by the way, I had MES shorts all lined up, and I kept raising them because I thought maybe, just maybe, K will take out J's high, or J will go a little higher, I should say, and get into that right below those 2 weekly lows. So shame on me because I missed a very nice afternoon rally high, 386.67. Then the single prints, 386.90 get filled at 387.56. That's F's high to C's low. And then we have 389.93. That's C's high. I think it's C's high. Yep, C's high to B's A's low at 390.40. Highest accepted price, B's high 391.01, and then today's high of 391.88. What's the highest accepted price? Just like the lowest accepted price. A closed. Now I'm in 15 tick increments, so it's tough to tell. A closed, B opened, went up like a penny or two, and never saw it again. And I said that to the room. I said, we have to see if that's the highest accepted price. And boy, was it. So we called the market very well today. Downside. Today's low, 380.78. Tuesday's low, 380.20. Then we have 379.60. Daily low, filling the gap at 377.34. 226-point gap from February 2nd. Inside of that is the 50-day moving average. And then things get a little dicey. 375.81 afternoon pullback low. And then we have 2 sets of single prints from the first. Please be writing these down so I don't have to keep repeating them. 375.12 to 374.77, and then 375.51. Actually, I wrote those wrong. Let's reverse it. 375.51 to 39. That's the first set of single prints from the 1st of February, and then 375.12 to 374.77 from February 1st, and then 371.42, which is this month's low right now, with 1 day to go in the month. And then on the charts, I'm going to show you real quickly here. Here's the monthly in SPY. Is it still healthy? Yes, it is. It's still healthy. We're inside last month's range, but one time framing up 4 months out of an inside month. That's still healthy. Weekly. Here's where it gets a little dicey. If we don't close inside of last week's 2 lows tomorrow, I will call it down. So we went bull. We went bull, balance, and then we'll call this down or bear if we don't close inside of it. Now the daily, for some reason, is not. Today's daily is not coming up. I don't like that, so let's go quickly to my other chart system for now. And let's go to the daily chart. Here it is. So here's the daily. I don't like the time frame I have it in. Okay. Well, anyway, we're in a 4-day balance. Right now we'll use yesterday's high is the high of it, and Tuesday's low is the low of it. And then don't forget the 50-day moving average is at 3. Where is the 50-day moving average? There it is, 379.45. So any acceptance below today's low, you will go see the 50-day moving average tomorrow. You can bank on that, my friends. I hope you had a good day trading today. Have a great night, and we'll speak prior to the opening tomorrow.